One of the best strategies for growing a small account, and especially for newer traders, is looking to dip buy OTC breakouts. Today I'm going to break that down, tell you what to look for so that you can spot the next great dip buy. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like, share these videos, and ring that bell. The biggest reason I always talk about having you ring the bell for the notifications is every day I go live on what's called the pre-market prep. What's cool about that, every morning, 8:30 Eastern, I answer as many questions as I have time, but it's the hot tickers of the day. So if you've got a ticker that you're interested in, maybe it's a OTC breakout like TSNP, and you're wondering, hey, is today the day to look for that morning panic? I break it down, answer everything in detail, live every single morning, 8:30 Eastern. Then, the great thing about that is, as soon as I get done with that, I take a little break. Usually I eat 6 or 7 eggs, depending on, some days as many as 10, but don't yell at me about the eggs. Well, I know eggs are always a contentious subject. But anyway, usually I grab some breakfast and then I go right into the 9 a.m. Steady Trade team webinar. Now that webinar, I spend 45 minutes going over those hot tickers. So if you've been on the pre-market prep, you know it's boom, 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 boom. A lot of the times I don't have necessarily the time to get into the nitty gritty of the details like I'm going to talk about in this video. Great thing about the Steady Trade team webinars, every day, 45 minutes long, twice a day, we can really dial down. And it's a small group. Love working with them. Check out the Steady Trade team. All right. Today, we're going to talk about the criteria and what to look for on a high percentage morning panic dip buy. So right off the bat, the biggest thing we're looking for is primarily, well, I mean, I say primarily, but 95% we're looking for the OTC stocks, okay? Whether that be bulletin boards or pink sheets. And if you're unfamiliar with the difference between an OTC and a listed stock, definitely check out our archive. We've got videos breaking this all down. Check out the blog. We talk about the differences. But if you know what an OTC is, let's start there. Let pause this video if you need to figure out the difference and come back. So now what we're looking for is that OTC stock that's breaking out on unusual volume. And I've got a great recent example, I mean, about as textbook as you can get, because this thing is morning panicked twice in the last 3 days. So twice in 3 days, you had this setup. But you can see what we're looking for is this stock was quote unquote dead for a year. We're looking at the 1 year, 1 day chart. Then it starts steadily uptrending on volume. Okay, so you can kind of start seeing, starts perking up a little bit here. You've got, good volume, and it's going to start showing up on your OTC scanners. Now, if you're in the Steady Trade team, we've got screener specifically set up to spot this perking volume, so that these things, because the whole idea with these, most of them are manipulated. They're air quotes pump and dumps. So they like to kind of keep these flying under the radar. They don't want you to know about them till the day, a week, 2 weeks later when they go vertical. Because I joke about but the people that are manipulating these stocks, they want all the FOMO traders to get in because they're accumulating shares, as they say, in that steady uptrend. Then they know when it really goes vertical and it's up, 100%, 300, 400%, they get all the FOMO traders and then they sell into them. That's what's great about StocksToTrade. We've got all the tools, especially the Steady Trade team screeners that are specifically built to spot these on the uptrend. So once you start seeing that, you start seeing that volume, you start seeing that float rotation. Okay, that's a concept we talk about all of the time. In that float rotation, the concept is, remember, all stocks are based on supply and demand. So the more times those shares are turning over, because, think about it. If you've got 100 cups of coffee and everyone wants a cup of coffee, then the price is going to skip higher. That's how you get these vertical moves. So the more float rotation you see, the higher potential for the stock to spike higher and attract more buyers, and all sellers are then going to be selling on the ask. They're going to be pushing their sells way up, which makes these stocks go vertical. So float rotation after that steady uptrend thing is what we're looking for. That also tells you there's demand. I mean, ultimately, We don't want to trade illiquid stocks. We don't want to trade stocks that there's no demand for, because once they panic, we need those buyers to step up to lift the bid and push these things back up so we can make 20, 30, 40, 50% predictable profits on these. So keep that in mind. You want crazy unusual volume, and you can see some of these days, as we start coming into the day of the morning panic, you've got 400, 500, 600 million shares trading each day. That tells you got something here. You go back, look in the spring, summer, early fall, trading a couple 100,000 shares, which is nothing when you're talking about a true penny stock. So then the next thing we're looking for is that big, quote unquote, parabolic move, okay? And that's what the true breakout is. And you can see, that's why I like TSNP as an example. Big up days. These are big up days going from, what is that, 1,000th of a penny to 2,000th of a penny. That's a 100% move, okay? Just that day. Now, the problem is, it doesn't look like much because we get that true parabolic move. And you can see skipped up 5 green days in a row. Stock opens at a penny, then closes the day at 3 cents. So 300% move. That's that parabolic or exponential move. Now okay, this is the day. Well, not the day, but there's a high potential after that big move. If this stock gaps down hard, we know bidders are going to step in because of the float rotation. Okay, all of the indicators have aligned. The volume, float rotation, big breakout on the weekly chart. We know there's a high potential for this stock to bounce and bounce hard when it does. So you can see the fast forward to that day, stock opens up at that 3 cent level, drops as low as 1 cent, 1.5 cents, basically 1.6 cents. So, huge gap down, 50, 60% gap down. Then what you're looking for is that basing action. And that's where I use the 5-minute chart. You'll hear me talk about the 5-minute candle theory all the time. And, it's something I really focus on in the Steady Trade team for entries and exits. So we look for that first green candle, first green 5-minute candle, because that's telling you that the momentum is shifting. Then we also look for big size on the level 2. Now, the one bummer is I'm showing you this stock a couple days later, so I can't show you level 2 live, but we have a lot of videos on level 2. You're just looking for that turn on the 5-minute chart and then big size on the bid. Then that tells you it's time to enter. Then you're looking to sell for consistent, 20, 30% gains. That's our normal goal on these, because almost always, and it repeats and it repeats and it repeats, if you get that huge gap down, you're going to get that bid up and you're going to get that predictable spike. And you can see once it turned on that 5-minute chart, once it based at 1.6 cents, went as high as 2.2 cents, which I know doesn't sound like much, but that's like a 30% gain. And then it starts tracking sideways. That tells you it's time to sell, because now the momentum is gone. You can see the volume is fading as well. You sell for consistent profits on a setup that you saw coming for days. Literally for days, because you see this thing every day, gaps up, gaps up, gaps up, gaps up, goes parabolic, closes at the high of the day. And basically what you're doing that next morning is if this is your play, if you're looking for that morning panic dip buy, you're ready at 9:30. Remember, OTCs, they trade very little in pre-market, if at all. They don't trade at all in after hours. When you see that red move, that first red day, as we say, you can just sit back, relax, and wait for that to turn. And you can see for 20 minutes, basically the first 4 candles of the day, red, and just destroyed. This is just a beautiful example of what we're looking for, because this is when we talk about panic, that's what you want. Look at these candles. This is the definition of panic. Nobody can get out, and if they get out, they just got to do market sells, which means they get terrible fills, which means the stock continues to bottom out, or the bottom continues to drop out. Panic, 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 panic. You wait for the turn. Consistently repeatable, 20 to 30% profit. That's what you look for an exact OTC dip buy. And the great thing about these is they repeat. I mean, we've seen these over and over again when they get back to the highs. So you can see TSNP hanging around, still at 20 cents. If this can get back to the highs, probably goes vertical again, you're looking for that same pattern, for that slamming, that 40, 50, 60% down, turn on the level 2, turn on the 5-minute chart. Now, the great thing about this setup, the other thing I love, especially for newer traders, is you have clearly defined risk or a stop loss. That's one of the biggest things that a lot of newer traders struggle with. Where do I stop out? Where do I stop out? If you buy that turn, and let's say the stock didn't bounce, because, listen, not every setup is guaranteed to work. You still got to have a stop. You're still going to take losses here and there. But if you keep them small, you can stay in the game over time and grow your account over time, become consistently profitable over time, etc. But what's great about it is you're just risking that low of the day. So let's say you buy the turn at 1.7 cents and it fails. It breaks the low of the day. It breaks down to 16 cents or 1.6 cents flat. You take that, tenth of a penny loss, which keep in mind, if you're trading the stock, you're going to have a boatload of shares, but you take that small loss for the big potential gain. So you lose single digit percent. Maybe you lose 5%. Maybe you lose 7%. But then the potential for 20, 30 plus, that's how you win over time. Because, I call it the rule of 5. You can lose 4 times a week, but if you win the 5th time and your win is 5 times the size of your losses, you can be consistently profitable over time. It's one of the big things that I think is pivotal to letting you figure out to stick to those stop losses, to stick to those small losses. Because if you lose 100 Monday, lose 100 Tuesday, lose 100 Wednesday, lose 100 Thursday, and you make 500 on Friday, you're a consistently profitable trader with a 20% win rate. Now, I know what you're going to say, Tim, I don't want to make $100 a week, but the point is, think about it. If you keep those losses small, you can finish the week green, which is the dream for everybody. But the math does not work if you take a 500 loss, a 300 loss, a 700 loss. It only works if you stop out at key levels, if you stick to your stop, and then when you do nail one, you get that big gain. And even with, 20% win rate is not what we're looking for, but even with a 20% win rate, you can be profitable, and you can do it with OTC panic dip buys. Now, full disclosure, there isn't one of these every day, but many of you might be under the PDT. Many of you might have day jobs. Maybe you got school. Maybe you got a lot going on. One of the best things about this setup, you can prepare the night before. You can set an alert. And if this thing's gapping down, listen, depending on when you're watching this video, TSNP hasn't given up yet. You could be getting a ding from your StocksToTrade or whatever your platform is that tells you this thing's down 40%. You're going to look for those things I told you about, and you can consistently spot this setup with a clearly defined, solid risk to reward. So let me know in the comments, what do you think about OTCs? If you watch the podcast, if you watch a lot of these videos, I have to admit, I'm more of a listed stock guy. I like my crazy liquid NASDAQs, but I know as a newer trader, OTCs are attractive, and I don't blame you, because you can get big size, you can get the consistently repeatable patterns. So let me know. Drop me a comment. OTCs are listed. Let me know, and I look forward to seeing you on the next video, and definitely check out the Steady Trade team. Would love to work with you every single trading day, twice a day.